Welcome to ForexTV.com. Today's Tuesday, October 13th. I'm Tim Kelly with the New York Forex Market Buzz. Gold continues to shine in record territory again, reaching a high of $1,068 an ounce today. Crude oil rose to a 7-week high in New York on speculation. World demand will grow as the economy rebounds and as a weaker dollar spurs demand for commodities. Treasuries rose for the first time in 3 days. Also on speculation, the dollar's decline will spur demand from foreign investors as the Federal Reserve keeps interest rates at a record low through late 2010. Today's rally follows the biggest weekly decline in treasuries in 2 months and comes as the dollar slid to the weakest level against the euro since before the bankruptcy of Lehman Brothers. In today's session, the dollar is mixed, losing ground to the euro, yen, and British pound, relatively flat against Swiss franc, Australian dollar, and Canadian dollar. U.S. equity markets are mixed but trading softer after downgrades on the banking sector from a prominent analyst. Well, today we're joined by Marco Hague, Global Trade Director at the LFB. Marco, welcome.
Hello, Tim.
Marco, it's been a little bit of time since we've last talked. Always a pleasure to have you here. I want to get right into it. You guys posted LFB posted a blog on the Forex TV Connect site. I know that comes from your main site. And you talked a little bit about dollar index support, a cap on euro dollar, and I had some interesting words about bonds, interest rates, and central banks. I'm going to throw it over to you, and why don't you give us a lay of the land as you see it right now?
Yeah, we're looking at the momentum flows. We've really zoned in over this credit crisis. I think Forex traders have had to look at these regional opens and closes, and we've spoken about that at length, Tim, that you get the main momentum now when these regional markets open, and we're seeing it in stark contrast on the currency pairs over the course of this last 2 or 3 weeks compared to what we've had over the last 18 months. The pairs are diverging. You've got pound going one way, you've got Aussie going the other. And outside of that Aussie interest rate decision, there really hasn't been anything else that's hit the wires that has been that dramatic to cause this amount of divergence.
Well, Marco, gold seems to just go now on its own. It's kind of got its own momentum. You think that has anything to do with it in terms of dragging dollar weakness along with it, and also in that respect, commodities go up?
Spider's web there, because when you look at all commodity markets, they're not all bullish. You look at wheat and you look at some of the softer commodities, and they're not doing well. The hard commodities are okay, but gold's got its own play. I still believe, and the trade team believe in the gold standard, whether it's officially spouted. There are moves on gold. When you look back, Tim, over 18 months of trade, and gold didn't move. And suddenly we've got this breakout momentum play. Last engulfing, maybe. Last push higher, catch some inflationary pressure just to kind of go the other way from the dollar. But we're just not convinced that the market is strong enough right now to take that dollar index under 75. And we've got the divergence with gold in the dollar as well.
Right. Well, Marco, it's not only the softs that are not following gold. Copper is down. There were some comments by the CEO of Rio Tinto that said demand is not likely to pick up in the U.S. and in Europe. So, in addition to the softs, as you mentioned, not everything's following gold. But I'm just wondering if gold is the fly in the ointment right now.
I wonder that, Tim. We looked at that, as I say, for about 18 months and didn't see the correlation on gold anywhere. And we are connected with some of the central bank desks, and we've heard a lot about this story that the shadow gold standard, that when you look at the movement in the gold market, it's been really hard to read. You would have expected gold to have already made this move. And it doesn't look as if it's a weak move higher. It does look as though it's well respected, and it does look as though this is the next level for gold fair value. The problem that we have now, though, as Forex traders, look at the euro, 48.50, looks like a roadblock. Then you look at the ZEW surveys that came out today, and these are like the ISM equivalent in the US. Usually a really good barometer, Tim, of Eurozone business sentiment, and they missed for the first time. Not only did the analysts not get them right, and it's normally one they now, these numbers were way down on last month as well. It's Eurozone can't afford a strong euro.
Well, that's exactly what they're getting. Just doing a data check right now, but yeah, that's exactly what they're getting. So, Marco, let's talk about how the pressures on the dollar shorts right now. Is this, are we getting to a place in time where it's politically inconvenient or uncomfortable to have a weak dollar?
100%. I don't see that we can have this amount of jawbone in. First time last week, we heard Jean-Paul Trichet at the European Central Bank press conference actually talk about the value of the dollar. We saw Mr. Bernanke in the testimony to take over the role of the Treasury and talk about the dollar. These things have not been heard of before, Tim, and they're not standalone. These things are not just something that slips out. They're well staged. It's jawbone to the degree that it will keep people off other people's back. But the bottom line is, we saw 75 on the dollar index. For Forex traders that are maybe a little bit newer, the dollar index formed in 73. A reading of 75 means that the $1 note you've got in your pocket now is worth 75% of what it was when Richard Nixon scrapped the gold standard. So that 75, we saw a massive move to come in to buy the dollar at that 75 support area 2 or 3 years ago, sent it up to 90, Tim, and in the same kind of environment that you wouldn't have thought, you'd have got a strong dollar.
Okay, Marco. So that's great clarification. So let's take that basis now. We're at weekly, monthly highs in euro. Translate that into a trading scenario. What do we have to look for the breakdown in euro, the breakdown in take Australian dollar? A lot of folks that I talk to think that getting back up to 90, the handle is a correction of the downturn to the low 60s. Right now, what are the cues we got to look for to say, okay, we've hit? And again, I'm not asking you to pick the bottom here, Marco. I don't think that's a good business, but what are the cues that we look for to say, okay, it's enough on dollar. The governments and central banks are not going to take it. Either there's a turnaround or a tightrope walk at this point, or we go sideways. What's your take?
I think we've just got to accept it's a commercial market. Forex is a follower. It isn't a leader. It's a commercial market that swaps goods and services around the world and also acts as a way of providing a reserve. And it's that interest rate differential. So to answer your question, Tim, I don't think any one pair is going to be able to go too far against the trend of the dollar index on its own without 4 or 5 of those dollar index components going with it. For example, cable got down to 57 today, but no room underneath there. And the reason there's no room underneath there, euro's going bullish, Swiss is going bearish, CAD's staying bearish. So for one currency to make that move and really sustain it after initially having that alignment of the central banks, I just don't think until all of these pairs come together and get that consolidation and movement as one, I don't think we're going to get anything other than 30 minutes of 60 pip, 70 pip tears unless we get the reactions from the central banks. We saw it with cable. Cable made that move lower only because of the Bank of England's comments. Aussie made that move higher because of the comments out of the RBA after raising rates. Real question mark on CAD. Don't know how Mark Carney and the Bank of Canada are really going to be that comfortable with the Canadian dollar at this level. And then Euro-Swiss. Swiss National Bank stepped in at 1,500. You can see it on Euro-Swiss, and we're getting down there again. So I really wouldn't be surprised to see a major turnaround on this dollar weakness story, and for the regional central banks to start to push the US to really back this long dollar policy that they're looking for.
Right.
Trade it is a tightrope because they're not moving the same way, and that's quite unusual.
Right. Well, you started this segment by saying we're having a divergence here, so we really got to look for most of the majors going in the same direction, the direction that we traditionally see them going in, where risk goes one way and safety goes another way. Right now we're going in different directions, as well as with commodities, correct?
Yeah, we have, and we've got 2 pairs, pound and yen, so cable and yen, that have got a weekly and a near-term trend in the same direction. Euro's neutral on the weekly, neutral near-term. Aussies neutral on the weekly, long in the near-term. CAD's neutral on the weekly, short on the near-term. There's only two pairs, and they're the two pairs that have been under a little bit of pressure, cable and yen, just on that economic outlook. So I think once we've stabilised, we've had the first central bank start to move on rates, which was the RBA. I think there are a lot of questions now as to how many other central banks are going to be able to follow that. And these central banks, they've got to try and get themselves out of this quantitative easing. They're trying to fight deflation, not inflation at the moment. And this is a new period of time, new traders' rulebook. We're learning the rules as we go at the moment.
Well, that's certainly the case. The first salvo, as you mentioned, in that exit strategy of monetary policy was the RBA. It's unlikely anyone else is going to follow suit, although Australia and Norway, I think you and I discussed this at one point in time, are in a different situation than the rest of the world. But Marco, I want to just, we're kind of going up against our timing here, so I wanted to just ask you some of the, you just want to pick one out of your trade plan. I know the LFB puts out a trade plan. It's something that I follow. Can you give us your one top highlight from the LFB trade plan?
The trade plans we've got at the moment, I'd say it's dollar yen. We've got the Bank of Japan's interest rate decision this evening. 90.50 going long, 88.50 going short. It's one or the other, and I think if either one of those breaks and holds on a daily chart, I think we're going to see a big move into that direction. And if we had to correlate that with everything else that we're seeing, it would be that would go dollar strength near term, when by no means dollar bullish. But near term, everything now has got to the stage where it doesn't look as though the market can push the dollar too much further without the cooperation of the major central banks stepping in and accepting their reserves have got to be revalued. Can't see that happening in this economic climate.
Okay. Hey, Marco, thanks a lot for our viewers. The LFB trade plan, you can actually go into the LFB, the LFB.com. Marco, why don't you tell us how to get to the trade plans? Sure.
If you go to the LFB main website, there's two feeds off the menu, and it's Forex Trader News, which you can pick up the flow of news data coming across our wires. So LFB homepage, Forex Market Analysis, there's the Forex Trader News, a chart of the day, which is an example of one of the charts that we put out, which make up 30 for our members, and we put out one trade plan a day as well, and that's one of 10 that we post out for members. So homepage, and then you'll see the Forex Market Analysis at the top.
Great, thanks a lot, Marco. That's the LFB, THELFB.com?
Yeah, that's it.
Okay.
Thank you, Tim.
My pleasure. Marco, it's a great pleasure having you. I want to thank you again for spending your time with us.
Thank you. Thank you very much.
This has been your New York Forex Market Buzz with Marco Hague of the LFB. To join our trader community and interact with Marco, he posts on ForexTVConnect.com on a daily basis, one of our main contributors and good partner of ours. You can go in there. It's a free registration, and you can interact with Marco, his company, and other traders there at ForexTVConnect.com. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.